when you have a growth project, you want to build the foundation from the beginning really well. We have the potential of building 30 of these Nalunaq mines in the whole region. That's what we are going to be now delivering to the market in the next few months.
You're building this with no studies. Give people comfort that there is the opportunity, because the grade, there is no doubt. Is there enough scale to make this economic? Hello, welcome to Crux Investor. First of all, thanks so much for watching this video. If you like it, give us a thumbs up. That helps us understand if this is the sort of company that you want us to spend our time, money and effort on for you. And of course, do leave your comments below. It helps us understand the sorts of questions you'd like us to be asking, how you think we did, and of course, what you think of AEX Gold. You can also get this as a podcast, a transcription, and an article on cruxinvestor.com. And for our Crux Investor Club members, you get early access to this video. And if you haven't already done so, please click the button in the corner of the screen to subscribe to our YouTube channel. And of course, for more videos like this one, please click the notification bell. We spoke earlier today to Eldur Olafsson, who's the CEO of AEX Gold. They're a Greenland-based gold developer, listed on the TSX-V and more recently here in London. Raised £42.5 million recently. I think a lot of gold companies getting financed at the moment, but this should enable them to deliver their plans of getting into production in the next 18 months. So quite aggressive timelines. No PEA, no feasibility study, and no DFS yet, and the jury's out as to whether they want to do one. So this is pretty much based on historical mining data. We talked about his plans for delivery over the next 18 months, how he thinks he's going to be received in the market for doing it in a slightly unconventional way. So take a look in the description at some of the topics we discuss. Anything interests you in particular, click on the number beside that topic. It's called a timestamp, and that should leap you to that part of the video. Otherwise, sit back and enjoy what Eldur has to say. Eldur, how are you, sir?
I'm fine, thank you. How are you?
Yeah, not bad. Thanks for coming back on the show. It's good to see you again. You've been very, very busy. But first of all, I always get people to give me an update. What's happening in Greenland? COVID, weather, anything you like. What's the update?
Well, yeah. The update on Greenland is that they're COVID-free. So I guess being an island, well, one of the largest islands in the world, and with not too much population, they handled that perfectly and very well. But the country is just getting more and more investment, and it's actually quite open for business. There are a lot of companies interacting going in back and forth to Greenland, building on projects, etc., etc. So that's good to see.
All good. Okay, well, look, we had a great interview with you a few weeks ago, but for people perhaps new to this story, give us that 1 minute overview, and then we'll pick it up from there.
Right. So we own in South Greenland gold assets, more than 3,356 square kilometers of gold licenses. This is basically gold on surface. And in the midst of that whole gold belt that we hold, we have a past producing mine called Nalunaq, which we intend to get back into production to support the growth of developing more of these deposits, and also to support dividend payments and increase in production in Nalunaq. So that's the kind of a story and what we're all about. Okay,
thanks for that. Well, let's talk about what you've been doing since we last spoke, because you've done two quite big things. One, you've listed in London, because you're a TSX-V company as well, and you've gone and raised a big lump of capital. And there's not too much happening in London, so I think that's quite a big deal over here. So why don't you talk us through what you've been doing and how that went, and was it easy to raise capital?
Yeah. Well, yeah, you're right. These are quite challenging times, and this was the first IPO in London post-COVID. So we were very pleased to get the support we got. We raised £42.5 million for the development of the Nalunaq property and all exploration for the next 18 months, or actually longer, next 24 months. But in 18 months' time, we intend to start cash flow. We raised quite a lot of capital. You'll see that we diluted ourselves by 50%. But what we see, this is a growth story. This is a story where we can build multiple mines in an overseas jurisdiction where you have high-grade deposits on surface. And on top of that, we are building it in a manner which is quite unique, I would say, because we have green resources available to build our energy demand need, and we can do things in a way that can basically create green ethical gold, as we call it. And by having Nalunaq, where you have knowledge base of two operators that mine the asset and now us, we can learn a lot from their successes, but also their mistakes. And one of the key issue for us is we've been operating that asset for the past 7 years. We've always, we've never taken on any debt. We've always done the right thing, I want to say, using that data that already exists. And one of the key aspects there is that when you start a project like this, one which is a growth project, is to be well financed. And we were really glad to see that the London market was able to support that overall plan, building a full cycle gold company in Greenland.
Okay, but you are listed on the TSX-V. You do have a Canadian following, but so why did you feel the need to come to London? Why did your listing, certainly for a company of your size, that's quite an outlay, first of all, and two, were you not getting the love and attention that you wanted from Canada?
Well, I think first and foremost, I think London is a fantastic market to raise capital. This is the financial hub of the world, or you can at least one of them. And I think there have been less and less mining stocks, certainly gold stock, available in the London market. So we saw that as an opportunity. Secondly, I think Greenland is quite close to London. If you think about it, you have UK, Iceland, and Greenland. It's all in a kind of a similar way. So I think there has been more and more focus in Greenland, and I think the London market understands Greenland quite well. Last but not least, I think the London market also understands the concept of building a full cycle gold company. What I mean by that is that we want to be able to, pay dividend to our shareholders. We want to be able to build up growth potential in the region, and this is a jurisdiction where rule of law. It's an OSC jurisdiction where we have rule of law, good mining code. Our, as I said earlier, we're doing green ethical gold, which means that we are considerate of the environment and this prestige environment that we're working in. And I think having all of these combining factors makes us quite unique in the London market. But I think also that the investors in the London market, this is something that they've been looking for, I hope at least. And that's what we saw in this raise, is that we managed to raise this capital and got fantastic demand and good investors on board due to these reasons, I believe. Quality of all aspects of the project.
Okay, so that's why you saw a gap in the London market, and I guess you have to wait and see whether that is true. But gold companies in Canada are having money thrown at them, and not very good gold companies are having money thrown at them as well. So were you not capable of raising the money over there? Would that not have been a sort of cheaper solution for you?
Well, we raised a bit of money there in the IPO, to be honest. So that we fundraised in both markets, to be honest. So that's what I looked at. I looked at the fact that, we wanted to be in a position to have access to as much capital and as much shareholding pool as possible. So this gives us that freedom. So we have no intention at this point in time to delist or do anything like that in Canada. We want to keep both listings. But we just saw that there are so scarce amount of opportunities in the London market, and this being in Europe, it is under a Danish flag, but Greenland is home ruling government, and I think it should have a very good appeal to the London market.
Okay, and you're not worried about your focus, your time, your attention, and your money split between two exchanges?
No, I think we can manage that. I think we have gotten a very good experience in working in Canada. We are now obviously focused in London as well. It means a little bit longer hours for me, but I'm used to that anyway. Then it is what it is. But we also are better capitalized, so we have more resources to build up good communication with our shareholders and future shareholders as well. So that, again, this is one of the reasons why we raise sufficient amount of capital to be able to build up this opportunity to where we wanted to get to.
Okay, so you originally made an announcement at the end of June. You said you're going to raise 45 million pounds sterling. You actually ended up raising only 42.5. Was that? Did you have an issue getting it across the line? I mean, why was it less than you set out to raise?
No, certainly not. We raised the 42 million sterling, 32.5 million sterling, because we thought that was the actual right number. The total project project cost is 35 million. That's exploration and development of the mine. We had already included a considerable amount of contingency, more than 30% contingency in the whole overall cost. So that would include potential delays, drop in grade, all of these different aspects. Once we're getting closer and closer to our execution, our whole operational team in Montreal has been building up bidding processes and so on. And a lot of our costs are then starting to get confirmed during this process. So we just simply saw there's no need for so much capital. It actually dilutes just too much. And then on top of that, we've also been offered a lot of different financial lending and leasing and other types of financial support that actually allows us to raise less capital and making sure our shareholder would get face less dilution and the biggest economical I should say impact for themselves. Yeah.
Right. Okay. Because I mean, when we talked last, you talked about return on capital for investors, of which you were at that time 10% shareholder. How much did you put some money in this round as well?
Yeah. So I put it in like the board and the management. Before this round, we owned about 20% stake, and we had invested 5 million Canadian dollars ourselves, and we all participated in this round as well, quite significantly. And we've done that in every single round that we participated so far.
Okay, so let's talk about what you're going to do with this money, because if you're talking about return on capital, we've got to tell us what you're going to do. Let's maybe focus on the development component, and we'll come to exploration in a minute. So one of the things you talked about was maybe skipping out the PEA and going straight to feasibility. So let's talk about how you're going to spend your money.
Yeah. So in the next couple of months or so, we will have firm bids and offers of all of the biggest components in our project. So you will have seen in our press releases in the past 2 weeks results on flotation, results on gravity test work, and all of these different test work that we've been redoing. And so majority of all of those proposals will be out before mid or end of August, I should say. And then we will start detail engineering and fabrication once we've selected a provider for these different aspects. That actually puts it into almost more than a feasibility. We're actually doing that. And then on top of that, what will then happen is that during that's going to be all of this equipment and camp and mining equipment, everything that we need is going to be prefabricated, tested, and then shipped to site early next year. And then we'll start by April, May, developing in Nalunaq and starting to go into taking out ore, essentially. While we're doing all of that, our team is on the ground today, I'm glad to say, and we are starting drilling in Nalunaq, and we're starting all of our exploration over all of our properties. So this will be ongoing up until end of this year. So we are testing targets, more than I think 30 targets of new deposits, and we are also drilling quite significantly in Nalunaq to further enlarge in our exploration target at site and tee everything up for development next year.
Okay, so if I look at the history of this project, it's not pretty. You've had a couple of companies try and fail to get into some kind of commercial level of production. They haven't been able to do it. So can you talk to me? And and I think the thing that excites people about your project, very high grades, and we're talking 16 grams a ton kind of level. So remind people what it is that you've got, if you don't mind, but also maybe share with us some of the lessons from previous failures.
Yeah, I think generally there are two operators that mine, and we looked at it with very open eyes when we took on this project. So because for us it's important, in my previous work where I've done exactly the same thing, and is to know exactly what you're going into. And the key thing here with this project is that the geology is fantastic. Okay, that's what you need to know, because if the geology is not there with you, then you can have problem. You can't change geology. You can change everything else. Well, with these two operators, the first year we had Crux Gold and then later on Angel Mining. Crux mined majority of all of the gold, and they were very successful. Crux mined the asset from 2004 to 2009. They were doing 50 to 70,000 ounces at a $530 cash cost, and and they were shipping all of the ore first to Spain and later to Newfoundland. So they basically proved the exploration study, exploration method. They proved the mining methods, the processing methods, and operational capabilities on site. In the back end of 2009, in the aftermath of the financial crisis, Crux was going through their own restructuring because they had built up asset base all around the world. And so Angel Mining PLC took on the asset, and they did very little new mining. They built a processing plant on site. They were in the kind of end of the last cycle of where the gold prices started falling and so on. So they had a lot of operational and financial difficulties, to say the least. And this is in a public domain, so I'm not criticizing or saying that. You can look it up yourself. So I don't think that represents maybe much mining. Well, they hardly did any new mining. And therefore, by looking at all of this historical data and seeing that Crux actually mined 350,000 ounces there very successfully, they followed the structure, they proved all the mining methods and so on and so on. When you had the Angel Mining, they were using old equipment, they had failures on the equipment, on generators, they had quite a bit of high turnover of staff and so on. All of these aspects we looked into. And how are we addressing it? Well, all of our equipment is new. Our processing plant is brand new and pre-tested. We're well capitalized. We don't have any debt in our structure at all. We worked on this asset, technical studies, 43-101, a new kind of a full set of assets for the past 7 years with this project, and we've always come on budget and followed our plan so far. So that's the kind of a difference I see there, and I think it was Olafsson who said, if you want to find gold, go to the last place you mined it or where it was. That's how and that's been our strategy. Is we defined this resource of 250,000 ounces and then this 2 million ounce expansion of that resource, where we sampled and we drilled more than 10,000 meters to firm all of this up to be in the position where we are today. So that's why we feel so comfortable, confident. And so do our investors, because we can kind of, if we basically lay the data in front of them and show them what we've been doing, and that gives us this, yeah.
So tell me why you've raised £42.5 million sterling. Given, like you say, it's 50% of your market cap. You've diluted yourself by 50% by doing that. Why not take it in increments? I'm just saying, again, trying to understand the mindset. Do you want to be fully funded through to what point? Could you have done it a different way? And why didn't you?
I think what our focus has been is to build when we say a full cycle gold company, that's another element to your point about history of the project and history of working in the Arctic. Okay. So when you're building a project like this one in the Arctic or Iceland, where I come from, and other places, you want to be able to be in the position where you don't have to rely on, is the gold market good now or bad now? Because you need all of that capital to start production. Secondly, a lot of our resource expansion will come from developing in the deposit, doing tunnels on the deposit. That will give us, we believe, the highest impact of increasing the resources. That means we can work all year round. That means we have to build up quite a bit of infrastructure to be able to do that. Having all of this infrastructure in place will actually allow us then to explore the whole region very inexpensively and cheaply. So it gives us a platform. When you're working in Greenland, you need to be able to be in a position to be your own boss, so to say. You can't rely necessarily on different contractors coming on site like you can do in Canada or even in UK. You need to own and operate everything yourself. And that's how you can compete on cost and exploration results and so on compared to other opportunities. What has really changed since we started this project in 2013 is that people are thinking more and more where to put their money from an ESG point of view, and can they invest in places like Africa, Latin America, Russia? These are concerned. People are also considered, and they want to be in OSCE jurisdiction. People and investors are also considered about about environmental and how you operate within the community. Are you paying good salaries? Are you paying good taxes, royalties, and all of the rest of it? So all of these different aspects, high grade, a lot of infrastructure in place, which means our development risk is very, very limited or low because most of our investment is coming from somewhere else. We're well capitalized. The cash flow from high-grade resources, at least from our past operation, was really good. They were doing it at $530 per ounce cost. And then the expansion of resources is something that we can really, really build upon. And this, has not taken into account any kind of a debt instrument, bond instrument, or anything like that before we start. And so when we are, for example, starting our production in 18 months' time, we will have already stockpiled then worth approximately 1 year's worth of ore before we start. So before we start, running it through the mill, we will have stockpiled all of that ore on site, on surface. That, all of these things is to be able to say to investors, like I said, I want to be in the position to pay dividend, support the exploration in other region, and also expansion now. And I cannot simply do that unless I'm well capitalized in the beginning and I have a good visibility on my cash flow a year ahead. That's how you do a proper planning with these things.
Okay, so in 18 months' time, how much cash do you think you're going to be sitting on?
We never go under 10 million Canadian dollar on our bank account. That's just the rule in our whole company. Mm-hmm. We have allowed in that scenario to have 6-month delay, drop in grade, drop in volume, increase in development costs. All of these different aspects we played into our model to be able to make sure we protect ourselves correctly and deliver the value that we support to investors. Maybe to your question about dilution, because it's an important one. When I built my last project in China, where we built up the largest geothermal district heating company in the world, city after city after city, when you have a growth project, you want to build the foundation from the beginning really well. You want to have good shareholding pool supporting you. And if you do that, we have the potential of building 30 of these Nalunaq mines in the whole region. And that's what we are going to be now delivering to the market in the next few months, is that we're doing exploration on all of these different deposits that we have, where you have high grade either quartz vein or granite on surface, and they extend sometimes for kilometers over the distance, and we're going to be testing that and delivering that. So once you have Nalunaq, you have your SIA, your EIA, all of your studies, your operational base set up, we can then start doing this again and again and again and again. And that's why you want to be well capitalized. So when you build your next mine, then you can look at the debt market or the market to actually when you're in cash flow and so on.
So what's the answer to the question? I said, how much will you have in 18 months? I know you won't go below 10 million, but is that where you think you'll be at 10 million?
No, so we have it. No, we have it. So at 18 months time, we will be generating cash flow from that point in time. So we have, so we will be at 10 million Canadian dollars. But that's assuming we go full ahead with all of our exploration and development. Yes.
Right. Okay. So what I'm trying to get at is you're telling me you think you're going to be in cash flow in 18 months. Okay.
Yes.
Which is pretty aggressive. So what have you got, or what do you own? What have you inherited to be able to start processing the 1 year of stockpile? How does that work?
Yeah. So during that time, by July next year, we start developing underground. We do 2 kilometers of underground development. So we will have then taken out about 50,000 tons before we start. In addition to that, we have 20 to 30,000 tons stockpiled already on site. So that's 70,000 tons. A yearly production for us is 100,000 tons. So before we start, then we're there. So you say an aggressive timeline. We have 18 months to prefabricate, build, processing plant, not on site, in Canada, and we bring them in on trailers, right? It's a plug and play setup. So that's plenty of time. If we would not be in a position to be in that period, we have already allowed another 6 months of delay within our capital model. Not that we think we're there, but because this is plenty enough time for that. So.
But there's no PEA, no feasibility study, no definitive feasibility study. You're building this with no studies. So why should people feel comfortable with what your approach?
So the confidence is this one. The feasibility study, the project of the history of the project is this one. It was discovered in 1994. It got drilled and developed. It got a feasibility study made in 2003. Then you had mining all the way to 2014. That's 6 years ago, right? So what we have done is that we have a technical report, 4301 technical report on the project, which defines all data and all of the facility around the project. So we're restarting production from where they stopped. That's where it is. And what is the key element of when you're restarting production like this one is to define more resources. So we currently have a resource of 250,000 ounces. What we have been doing in the past 7 years is to define larger resources. So we have 250,000 ounces at 18.7 grams per ton, or we have more than 2 million ounces in front of us. So what we're going to be doing? Well, we're going to be using the same mining method, same processing methods, which are all proven and are there. And the mine itself is in a stellar condition. So it's just literally in weeks' time, we can start again.
Well, I hear you, but I'm trying to work out if it does make sense. So, which is you've got 250,000 ounce resource. You're saying you've got 2 million in front of you, but you've got no piece of paper.
That's exploration target.
There's exploration target. So, like I say, exploration target it's easier to say, but it's not there yet. So it comes to that question of scale. How quickly, given you've now got capital, are you going to be able to get to a point where you can actually provide some numbers around scale, and maybe you're going to need to do it more regularly over the next 18 months to give people comfort that there is the opportunity? Because the grade, there is no doubt. Is there enough scale to make this economic? So, I mean, how do you answer that?
Yeah, I mean, definitely. If you just look, I cannot say it from the regulations, but I can only talk to in the past. So if you look at the grade and you assume $2,000 gold price, and you look at the 500 all-in sustaining cost, right? You are looking at your payback period is less than a year if you're doing, say, 100,000 tons or 50,000 ounces a year, right? But the development into that deposit will increase the resources at the same time, right? So during that first 18 months time, you have something in already there, which is 250,000 ounces, right? And then once you're developing, you are then developing into that exploration deposit, which makes this so unique compared to any other deposit. And if you want a reference or comparison, look at Macassa, look at Segovia, look at all of these different mines where you have small initial resource, inferred even, right? Because you have high nugget effect. And then while you're developing in the research, you do two things. You produce and you increase the resources. That's why these companies, these mines have outperformed the market again and again and again, right?
Okay. Now, you've got the Danish State Development Fund as a shareholder. So I guess getting licenses and permits must be pretty easy, is it?
No, it's nothing like that. I think Danish State, Danish Growth Fund and Greenland Growth Fund, they are just separate entity from the government. The license policy is a very straightforward. It's anyone can apply. You could apply if you wanted to. You had the technical capabilities and the money behind you and the history. And then you can do that. And then if it's an open door policy. So if you fall into competition, then you're going to be weighed up. But there's no bias there at all between entities.
Okay. So talk me through the next 18 months precisely. What's first up? And I know where we end up. We end up in production, apparently. So talk me through what you're seeing as the challenges ahead of you over the next 18 months.
Yeah. So what we are going to be doing, we're going to start with further drilling now in Nalunaq. So going to drilling more and more in South Block and that area, expanding both our knowledge base and then also make the drilling more denser. And that gives us a very good track record before we start developing on the resource. So in this kind of a mining, you drill for structure, you drill for grade, okay? And that's what we have been doing and will be doing. Then in Nalunaq, at the same time, we will be finalizing the bidding process for the camp, processing plant, surface equipment and underground equipment, and the mine contractor, right? They will then be on site in April, May next year, once we will start setting up the camp and all of these things, and then we'll start drilling again and doing all of the work in Nalunaq. Now I'm only speaking to Nalunaq. In Nalunaq as well, this year we'll be starting doing foundation for the processing plant, or expanding the foundation where the last we have current foundation already. So we're expanding that foundation, and we're also doing the same thing for the plant. We will then be doing up until end of this year exploration on all of these different targets that we have within our license portfolio, and delivering that to the market over the winter months at the same time.
Okay.
So once we're in July, you asked about that. You're doing 2 phases, so about 4 meters a day, or 2,000 meters over 4 months. So by end of October, we will have then done 2,000 meters of development into the target. Last time Crux Gold, which we talked about earlier, did 2,000 meters of development. They declared more than 1 million ounces of resource. I'm not saying that's the case this time around, but that's the potential. We're going into the deposit and taking out ore at the same time.
Okay. When you raised money, you must have been saying to the brokers or to institutions, this is the scale of the opportunity. They needed some kind of economics around this to understand why they should give you their money, right? So please help me. What is your sense of the economics around this, so I get an idea of where this could go? Yes.
So, I mean, if I look at the past history of the project, their yearly production was 50 to 70,000 ounces a year. Their mining method and the processing method, they were proven. What we're going to do differently than Crux Gold did is that we're going to move and make sure that the processing plant is on site. And the reason for that, there's cost of shipping the ore, and there's also losses, right? So 50 to 70,000 ounces a year at a $1,500 gold price, right? That's, or let's say $2,000 gold price, that's up to 100 million US dollar a year in cash flow, right? With this kind of a grade, in the past, they were doing 530 all-in sustaining cost. If you look at the Macassa mine, similar grade, $500 to $600 all-in sustaining cost. That needs to be proven through our operation as well. But that's why we are so interested in developing and taking this forward. When Angel Mining was mining this, there's not as much visibility on the costing and so on, due to the fact that they went into administration. So we needed to look into that in more detail. Yeah.
Why are you so keen to talk about dividends now, even before you started producing?
Due to the fact that the opportunity of this grade gives us the potential of paying dividend, right? So when can you not pay a dividend? If you have a massive deposit somewhere, sub 1 gram per ton, and you take on as much debt as possible to be able to bring the project online, because it costs you $1 billion or whatever, you pay the debt holder the first 7 years all your free cash flow, and then after 7 years you start generating some cash flow, but then you only have 3 or 4 years left of your mine. And due to the fact that you don't have anything more than, is due to the fact that you had to define all of the resources before you started. In this case, we have funded everything with equity up front. Having this grade gives us the opportunity of quality cash flow, right? And therefore, if our plans and our focus points is correct, that should generate a lot of cash flow, right? And therefore, we would like to be in a position, I'm a large shareholder, we would like to be in the position to pay dividend to our shareholders, just to compare ourselves to any other company out there, and also just to have discipline on our operation, right? I've gotten the question from many of our investors in this, is that why would you pay dividend? The other assets are so great, you can build up so much resources there. Wouldn't you just spend it all in country and develop more and more of these? And my answer to that is that yes, to some extent. I understand then that we will always take a view on that. But having that discipline, the same discipline I had to undergo for the past 7 years, I think is important for a company. And you cannot simply do that if your balance sheet is not correctly set up.
True. Okay. Well, let's see how that plays out. Now, talk to me briefly, if you may, about your approach to the 20 or 30 odd properties which you mentioned to me last time out. I mean, surely that's got to be parked up to some degree, or are you going to approach it, use some of your capital to sort of develop those who've got a sense of what you've got?
Yeah, so we basically fully funded both exploration and the development of the mine. Okay, we funded the whole thing. And so we will be using capital to explore these deposits. So just so I go through it step by step. So we're going to be defining them this year, testing, these are all surface outcrops that we are now sampling for several hundred meters. One of them is called Vagar, which we are going to make sure we get drill ready by sampling more and more on surface. We're going to do some high prospectical imagery as well and so on. And we hope to be able to bring results of that to the market in October. Then we have 20 or 30 other of these targets where you have just vast amount of deposit on surface, which makes it so unique. And then next year, we have already funded the drilling for Vagar. That's within that budget that we already have. And then following that, we can then use the cash flow from the minor operation to further fund the drilling of these other deposits, right?
Okay, brilliant. Eldur, nice update. You've been very busy since we last spoke. I mean, well done on the fundraise, first of all. It's going to give you the optionality to approach this the way that you want. So, stay in touch, pick up the phone, let us know what's going on. It seems you've got a lot to do in the next 18 months, so no doubt there'll be news flow.
Brilliant. Thank you.